If your son or daughter were raising around, what would you tell them to watch out for that most CEO founders miss? And I'm super excited. Today I'm with Mitchell Green. Mitchell is a co-founder of Lead Edge Capital with Nime Mehta and Brian Nider. And PitchBook just named Lead Edge Capital the #1 performing growth equity firm in the world. With over $5 billion under management, they've backed companies like Alibaba, Asana, Duo Security, Spotify, and ByteDance. I'm proud to be an LP, and over the years, I've come to really appreciate that one of the things that sets Lead Edge apart is a deeply engaged network of over 700 plus operating executive LPs and GPs who deliver real value long after the check has been cleared, and which we're going to talk a little bit about. Before Lead Edge, Mitchell was a nationally ranked alpine ski racer. And today he channels that same precision and that competitive nature into winning races in the Ferrari Challenge North America Series. It's that combination of focus, speed, and discipline that you'll hear come through, and how he and the team at Lead Edge invest. So Mitchell, thank you for being on today. I know you're stepping time away from your family and other commitments, and it's a Saturday, so thank you.
Yeah, no worries. Sorry to make you do this on a Saturday.
No. This is great. So let's jump in. So
Sure.
got a handful of questions I want to run through, and appreciate kind of your insight. I know our listeners are really going to appreciate it. So one question I have, and I'm curious to learn about, if your son or daughter or some family member were raising around, whether it's seed money or Series D, what would you tell them to watch out for? Whether CEO that most CEO founders miss.
Yeah. So, well, thanks so much for having me on. I think don't get blinded by valuation is probably the most important thing. The highest, headline numbers, aren't always the best deals. Sometimes it's coming with terms that are impossible to meet without distorting the business. Sometimes it has like very onerous downside terms. A clean deal at a lower price, we always say, is almost always better for the entrepreneur over the long run than a complex structured deal at a much higher price. Now, why is that? Entrepreneurs are always optimistic. That's why you're an entrepreneur. Of course, like if I'm doing 15 million in revenue this year, like of course I'm going to do 50 million in 3 years. Maybe you don't, like, and so I think it's when you have a really, really high valuation, you set a very high bogey for yourself.
Mm-hmm.
And so I think it's actually like you want your investors to make money as well. And I know we'd say keep it clean. It's just much easier. And so, like if I were advising my son or daughter, I'd also say, like, again, don't just ask about the valuation. Ask about, how are you going to help me? Who are you going to
Mm-hmm.
introduce me to? How are you going to help me find my next head of sales? How are you going to how are you going to find me my CFO? How can you get me how can you help me get, my top 10 customer targets? By the way, additionally, I want to talk to a couple of your entrepreneurs where it didn't work. That's actually more important. Like,
Yes. Yeah. So,
it's just funny. Like for us, if you go ask Doug Song at Duo Security, or Brett Hurt at Bazaar Voice, or Chris Capriato at Toast, like, of course they're going to say great things about us. The companies, we all made a ton of money together. But actually, you want to go talk to the companies that were like 1Xs or you even lost money in. And it's like when times get tough, that's actually how you want to really see how people behave.
Yeah. So do you have some examples? Because I've lived that and watched that with companies that I've coached and advised, where they just create so much overhang they really can't make it up because of the valuation.
Yeah. So a messy cap table is like a silent killer. It might feel like a win early on to just take checks from tons of small investors. We call it like the party round. You take a round where there's like you raise $50 million, and normally you'd have like one investor do 45, and then some people do like the existing investors would do the follow on, would do like their pro rata. But instead, you don't get one investor to take 45. You get like four. Get like four investors to split the 45. That's called a party round. That's like we also refer to it as a low conviction round.
Yeah. Okay. Yeah. Yeah. That makes a ton of
And
sense.
actually, and then at that point, years later, when you're trying to get something done or sell the company or raise more money, you have all these investors with like different voices. So, some of them are at different prices, misaligned incentives. Investors all have different agendas. I just keep it simple.
Yeah.
Yes, if it's a rocket ship that when you invest is 10 million and it goes to 300 million and you paid a reasonable price, yeah, then it's not going to matter if you have lots of different series and different structures and everything like that. But like most companies face a hiccup at some time.
Yeah. So let's talk about that for just a minute, and I'll dive down this a little bit here. Is when it comes to communication, I think you guys are just exceptional, and we'll talk a little bit more about that. What is your expectation, or what do you see the best CEOs do when those hiccups do happen?
Communicate, communicate, communicate. Well, some of the best CEOs you've ever backed. Actually, I'll put Brett in this bucket from Bizarre Voice. Like I think he just didn't believe in such thing as not communicate, like under communication. Like
Mm-hmm.
every week he'd write out like an update on the
Yep.
business, and you'd know exactly what was going on. And he shared it with, I think it went to the whole company as well. I'm not even sure, it just went to the investors. And it was different division heads or once a month. I think that communicating with people, if you've got good news, give it. If you've got bad news, give it faster.
Yep. That's great advice. Yeah, I know Brett does a great job of that, and he also uses advisors extremely well. We're going to have him as part of this program as well. What's one term that, that in a deal structure, maybe it is the valuation piece you're talking about, but what's one term that looks like a win at the time, but really sets the company up to lose later?
It's about like value. It's a win evaluation.
The valuation. Okay.
The valuation. It's just it's valuation. It's keeping it clean and simple versus ratchets and structured deals and participating preferred stock and like if you're an entrepreneur, do a deal at a lower price and a clean structure. You should do that all day long.
And kind of double down, like you said, and really investigate the investor that you're getting ready to work with. Talk to people that,
Oh, you're getting married. But you're getting married to him, and it's
yeah,
really hard to get divorced.
yeah,
Like,
yeah, yeah, yeah,
it's like it'd be like getting married in the Catholic Church, 100 years ago. You can't get divorced.
yeah,
It's almost impossible.
yeah,
Or the way to think about it is, if you get divorced, your spouse is getting the company.
yeah,
Your spouse. By the way, you sign up for a marriage, and you
yeah,
basically sign up for, if you get divorced, you're going to get thrown out, and you're not going to get any of the stuff. You might
yeah.
get your equity, but you won't be involved. You'll never see your kids. They'll never go back to your house again. So, like, I think that's the way to think about it.
Yeah, no, I don't think that's an exaggeration. I think you got to take it that seriously. And because I think a lot of times people get kind of excited about the money, about the valuation, and they assume that, everybody has good intentions and is going to show up to help. So, what and along those lines, what is it kind of in your view, what do founders often expect from investors or board members that just doesn't play out?
Well, a lot of investors will tell you they add value, but for many, that frankly just means showing up at board meetings and asking for the numbers. Founders hear that, and I think founders hear that they're going to help, and I think founders should expect to have introductions, help hiring, customer access, and then oftentimes it never happens. One question you want to ask the person that's going to join your board is, how many boards are you on?
Yeah.
There are lots of VCs that sit on 12 to 15 boards. If you are on the board of 15 companies, let's say you have to travel for 10 of them. So that means, it's really a 3-day affair, 4 times a year. It's literally 10 companies, 40. If you just had to go, if you had a board meeting, each company, it took 1 day, 4 times a year, that's 40.
Yep.
It's times 3 days of travel. That's 120 days. Like,
Yeah.
when are you gonna have time for a new company? And by the
Yep.
way, you're in the business of looking to, and you're at the business. You're in the business of like looking for, investors are in the business of looking for new investments. So I
Right.
think it's like really important thing to understand how much, and to set one, see how many boards they're on, make sure they're not overboarded, and then two, uh, really diligence and understand. Like, I would recommend, if I was taking money if I was going to get married to somebody where
Uh,
I knew that if things went wrong, I would basically be out of the picture and gone. I would make sure I would try to talk to almost every possible reference I could on this person. And I would make sure I could find some bad ones too.
Yeah.
Or I would at least find the ones that didn't go well, because that's where you're going to really know like how this person is in the trenches.
Yeah. Yeah. And really
And
listen.
and be like, listen, I want to talk to the founders that you fired. Like that's what I want to talk to.
Yep.
Or yeah.
Yeah. Well, and listen to what's not being said, right? I think sometimes you get so excited about the money or feel like you need the money that sometimes the signals are there, but you just ignore them. You become numb to them. So yeah, that's super
Yeah.
important.
And I also believe not all companies should actually be venture funded either. And so, at the end of the day, it is when you exit a company, there are two numbers that one number people forget. They all remember price. They all remember the valuation you sell at. They all forget percentage ownership you have.
Uh-huh.
I know a lot of founders who sold their businesses for like 150 million bucks and own 70% of the company. Those founders made more money and oftentimes than entrepreneurs that sold their businesses for $3 billion and own 10%.
Yep.
And so like it is about keeping ownership. Like, your equity is your most valuable thing. And so like what we tell people is don't over raise and overcapitalize your business at low prices, at low valuations, because again, you're just giving up equity you don't need to. And at the end of the day, your percentage ownership is the most important thing. Well, at the same time, you shouldn't overcapitalize either, because then that forces you to be like sloppy and
Yep.
you'll just spend on stupid stuff that you won't otherwise need to.
Yeah. And we're kind of laying the foundation here in a couple of these questions. I'm going to deep dive in kind of each one of these things that we kind of are opening
Sure.
up talking about. Because what you just said and I want people that are listening to kind of double down and hear what you just said. Oftentimes you're advising people to like, don't overraise or don't, equity is the most important thing. That's great advice. But behind that advice is somebody who actually cares about the entrepreneur that would even give that advice, because it'd be really easy for you not to give that advice. And like I said, put handcuffs on them. And unfortunately, I've seen where investors, I don't know if that was their intentions or not, but that's the way it played out when things got hard.
Yeah.
So that's super valuable. And we're going to talk a little bit more about that. Another question is, in this era of AI, and I've seen you on Squawk Box and seen you on other podcasts talking about AI, and I don't want to dive necessarily into that portion of it, but how does AI make capital either, more valuable or less, in your opinion? In other words, what does, execution have to do with this, and how is that going to change?
Yeah. Look, money matters still, obviously. Execution's everything. Look, AI lowers some costs, speeds up some processes, and can potentially level the parts of the playing field.
Mhm.
Again, it's if you have the right team, you can probably do more with less capital, but it's a lot of like so can your competitors. So like with scaling distribution, building brand, navigating competitive markets, like still obviously requires resources.
Mhm.
And so, I think in AI, the winners will still be about those that have distribution, infrastructure, talent, not just who's raising the most. Um, and so I actually think we think of AI as like a massive a productivity benefactor for
Mhm.
companies. Like if the right team should be able to do more with less. That's it.
Yeah. 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 And what about the wrong team?
And they're going to burn a lot of money on it,
Yeah.
is my guess.
Yeah, 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 and talk a lot about that. So let's dive deeper into each kind of these areas that we talk about. As I said earlier, you co-founded Lead Edge with Nime, with Brian, and as I said, PitchBook recently ranked you guys as the #1 performing growth equity firm, which is not easy to do. And there's a lot
Means,
of
by the way, means we have a great head of PR comms.
there you go. I think it means more than that, Mitchell. But so what a question I have is, what was the vision when you guys started, and how has it changed along the way?
It really hasn't changed. That's the crazy thing. So when I started Lead Edge, I had spent my career cold before that. I had been at Bessemer Venture Partners. I started Lead Edge right before that. I was at a hedge fund seated by Julian Robertson at Tiger, and before that, I was at Wharton Business School, and before that, I was at Bessemer Venture Partners. So, put things in perspective. When I was at Bessemer between 2005 to 2007, my now partner Brian and I left, 10,000 voicemails, and people left voicemails, sent 10,000 emails, and probably spoke to 6 to 7,000 companies. You know how you know what a good company is? speak to 5,500 crappy companies. Now, when we were calling companies at Bessemer, we were calling behind an institution or an organization that had been around literally 100 years. Had backed a huge number of world-class entrepreneurs, had a great reputation in the market, still does have a great reputation in the market. And so people would return our calls. When we set out to start Lead Edge, it was like, well, why is anybody going to call you? Like, why is anybody going to return our phone call? If I had been the global head of HR at Microsoft, and Brian was the global head of HR at Pepsi, and Nime was the global head of HR at American Express, well, guess what? We could have hired a couple young guys, gals, and told them to go call HR software companies. And it would be like, hey, if you take our call, we'll introduce you to the 3 founders here who have all been like big global heads of HR. It's like a pretty compelling It's like a pretty compelling pitch. Yeah. And by the way, they'll then introduce you to a bunch of HR software, a bunch of HR execs who you can sell your software to. Oh, that's valuable. Well, we had none of that. And so our vision from the beginning is like, how were we going to truly differentiate ourselves? And since none of us had actually run anything in our life, we said, why don't we make our competitive advantage and weapon be our LP base? And as we operate under this single KPI that we must have 95% retention of LPs fund to fund. And if you operate on that API, obviously that means you need to communicate with them. You need to be transparent to them. You need to generate them returns. But what that also means is the network gets better and better over time because people continue to introduce you to their friends. And so for us, it's just about building like the world's most connected growth equity fund on the planet, where there's literally not a company, we're not there yet, where if a company comes to us and says, listen, I've got an X million-dollar contract at XYZ company, who do you know at that company? That there's not that if it's a Fortune 500 company, there isn't somebody we don't know. We're not there yet, but that's the long-term vision.
Well, I really appreciate being an LP, and I've gotten the privilege of, seeing that in action, the emails where you're sending out and your guys' communication, whether it's a handwritten note from you, which is, very sincere and you do all the time. And I deeply appreciate how you leverage the LPs to just do trainings with each other. And I mean, like I said, these are world-class iconic people that are kind of at the elbow of what's happening in really in any industry.
Yeah.
I mean, that has played out like
what we figured out is that titans are like world-class CEOs and CFOs and CIOs and heads of HR. Just because they're world-class at operating businesses, like they're probably not world-class investors.
Yeah.
Because just like I'm not going to claim to be a world-class CFO or a world-class CMO. Like I've never done it. I'm an investor for a living, right?
Yeah.
And so actually, if we identify the companies for them that are like kicking butt, and we say, like, listen, can you help this company think about expanding to Europe? Can you help this company hire a CFO? Can you help this company, get an intro to Procter and Gamble? It's like we've identified what is a good company. We've taken that away from them. And we're like, listen, we're going to run around the world and talk to 9,000 companies a year. We will identify what's good because we have this like very specific. By the way, how do we filter them? 9,000 companies we talk to a year across 18, 22 to 24-year-old analysts. They're pounding the phones and emails. And if I said you had to meet 8 criteria, it'd be like 90 companies or 1%. To do 5 to 7 deals a year, that's too small. But we say if you meet at least 5, it's about 900 companies or 10%. You do diligence on about 150 of them to do 5 to 7 deals a year. And how do you go from 900 to 150? Simple, like 150 to 175. Simple. Most of the time, like we're calling companies, a huge amount of these companies are bootstrapped. They're just not looking for capital. Yep. And so now it's about like, how do we leverage the LPs to help the entrepreneurs and build relationships with the entrepreneurs, some of which take years before they end up doing something with us, either selling the entire business, selling a minority stake, helping us get secondary. But it's all about just like building relationships with people.
Yeah, and so the people that are listening, I want them to hear, and we were talking about this earlier, is when you're doing your due diligence on investing and you're asking these questions, listen to the responses that Mitchell's given right now, because these are the kind of things that you look for. Because like I said, long after the check is cleared, that's when the help really needs to happen. I see where a lot of times, money can multiply, your vision, or it can multiply your mistakes.
And I don't actually think that most investors like mean to deceive people. And what I
Yeah,
mean by that is they're not like they're going to try to help, but I actually think then they just get so busy and get so bogged down in the details that they actually then can't help. Um, and so that I truly believe like most people are like good human beings, and which is why you really want to do references with the companies that did not perform well. Like it's
yeah,
I almost believe it's useless to talk to the winners.
yeah, yeah. No,
You by the way, you don't hear many stories about a company being worth $10 billion where like the founder and the VCs hate each other,
yeah, that's
right?
very true.
Um, because it like worked.
Yeah, yeah. Well, I remember we were at a dinner at Brett Hurt, for his daughter's event for his daughter. John Mackey was on one side of me, the founder and CEO of Whole Foods, and you were on the other side. And I was asking you kind of about your philosophy. And I remember you describing not just this LP network, but you said, listen, I've never operated anything. I don't want to sit on the board. So you have GPs. Talk a little bit about that part of the philosophy.
Yeah. So now several of my partners sit on boards of companies. I have sat on the board of companies before. I frankly think if you already have, frankly, one or two other investors on the board of your company, there is no reason to be add another investor. Like you
Uh-huh.
should add somebody with like deep operational experience,
Mhm.
or multiple people with deep operational experience. Uh, the reality is, look, you should put people on the board of your company who you think can help. You should just have a defined mindset and goal for what you're specifically looking for. Like, what is it that you want? I
Mhm.
think money is one thing, but I think entrepreneurs oftentimes, like the best entrepreneurs know exactly what they're looking for in that next round investor, and they know exactly what they want that person to do. And so I think it's very important to match that up. And again, don't take the highest price if that person is not going to be it. Like, really, if that person is going to be it and is the highest price, that's great. But I think a lot of people trade off price for like actually picking the right person.
Yeah, yeah,
The
yeah,
dilution doesn't matter, actually. I mean, if you think about it, like if you're going to dilute yourself by 15% and the person you want is like going to dilute yourself by, you're going to dilute by 18%.
yeah,
So wait a second, for an extra 3%, you're literally not going to pick the right person. I mean, that just to me seems insane.
yeah.
But
I was
I
talking.
think,
Go ahead.
go ahead.
I was saying I was talking to Greg Kaplan. He founded Red Box. He's CEO of another company. And he had that exact same advice. He said, do not let that stand in the way of getting the right person.
Get the right person and then figure out the right price.
Yeah,
Very, very, very few entrepreneurs do it that way. Now, look, if you're selling 90% of your business, 95% of your business, and you're going to go to the beach after, then of course, like
yeah,
maximize price because
yeah,
that's
yeah,
fine. You're handing them the keys.
yeah,
But if you're not, it's just really important to be so many. That is like by far so many entrepreneurs, especially like first time entrepreneurs, make that mistake. And by the way, it starts with your angel investors. Like make sure you have clear objectives and you are on the same page as your investors. By the way, we do that in our own funds. We tell all our LPs, look, we are in the business of hitting doubles and triples, and we have a set defined return that we want to hit for our funds. And if you're looking for more like early stage venture returns, which are far more volatile, we are
yeah.
probably not for you. Because by
Mhm.
the way, we just want to set expectations right. It's just about setting expectations. It's like the
Yeah,
most important thing.
yeah. Well, you guys definitely stick to your knitting and the philosophy, like I said, putting people where their talents are. Like I said, most iconic CEOs and operators are probably typically not overly sophisticated in the investment side of it, but they do help on the operation side. And so you kind of bring that team together. I know you probably have lots of examples, but just think of one where you can share a time when that LP and that GP network really changed the game for a portfolio company.
I mean, we've driven tens of millions of dollars to Arrive Logistics. To Arrive Logistics, which Matt and Eric, logistics business down in Austin. LiveView Technology, we helped them win some huge customer accounts at some very big, global international, like global convenience store chains. Brett at Bazaar Voice, if you're having him, can talk about the value we added to customers. Look, if you drive $1 million of revenue and you trade at 15 times revenue, well, guess what? You just added $15 million in value.
Yeah.
And so, I think that there's countless examples of that. Like, the reality is, I actually think the best way, like at SafeSend, which we took a big stake in and then sold it to Thomson Reuters 3.5 years later, in Ann Arbor, Michigan-based company, just like, Duo Security and Doug were. But these guys had bootstrapped their business. And the founders made more money on the roll when we sold it to Thomson Reuters than they made when they sold us the 60%.
Wow.
Now, what did we do? We helped them build a team. I think Sequoia and Benchmark to get I think the secret sauce of those firms is they're actually incredibly good at recruiting people. And like the partners roll their sleeves up and help recruit great people. Because at the end of the day, you can't run 15 companies that you're on the board of or 10 companies you're on the board of. So it's about recruiting the best people and convincing the best people to join a company and then getting the heck out of the way.
Yeah. And that's what people that are listening, I would encourage you to go look at Lead Edge, go to their website and look at who the partners are, who the LPs are, who the GPs are. And you can see why when you send out an email to that group or you ask a question, you get access to a pretty vast.
Yeah. One other thing I think that is just, you can't, if the people that you hire in the business, you just have to let them run the business. And it's funny, people will ask us, potential institutional LPs who don't know us well, ask us, they're like, how do you think about a minority deal and a control deal? And the short answer for us is it's the same company. We just happen to own 60% versus 20%. Mm-hmm. If it's a bootstrap business that has never raised money, the amount of work you do when it's 20%, or if you own 60%, is the exact same, because there's no other investor on the table to help you. It's just you. But yes, if you own 20%, if you own 60%, yes, you can go jam a bunch of things down the management team's throat that they must do. Then guess what? Any good management team is all going to quit.
Yeah.
So that doesn't, in theory, it sounds amazing, but you won't attract the right type of people. When we do a buyout, we think of it as we just happen to own a little bit more of the business. But again, we're not trying to tell you how to run your business. Mm-hmm. We're trying to partner with you to help your equity and our equity be worth a lot more. I actually think the biggest advantage to owning 50+% is you kind of don't need to deal with all the other knucklehead VCs that are around the table at 10 different stock prices to figure out to build consensus. It's us and the founder. And it's just hey, what do you want to do? And so actually the less people that are on the cap table, which is oftentimes in control deals, the easier it is to actually make decisions at the end of the day for the founder as well.
Yeah, absolutely. And like I said, people that are listening, I want to double down on what you're saying, because you hear about founder friendly money and those kind of things. You're describing it to a T of kind of what it is to look for in that.
Founder friendly money isn't just or it could be, but we've had entrepreneurs that haven't taken our money because they wanted very passive money. They wanted money that was never going to talk to them and never going to try to help and just do nothing. They just wanted money. By the way, that can be what you're looking for. If that's what you want, find the right type of investor. Wow. And by the way, one of these entrepreneurs that wanted that, he said to us, he's like, I love you guys. It's just not what I want. Like, I think you
Uh,
guys are would be incredibly helpful. But at this stage of our business, I actually don't want that at all. I just want somebody that's going to write me a check and never call me, never going to bother me, not even bother me, just never even interact with me. And it's
uh,
just not, that's not the way we do business.
yeah, yeah. No, that's really good.
But it
Well,
was
what?
like better, it was better for that person to realize it and like tell us before we invested than after we invested, because then you have a complete like, expectation mismatch.
Yeah, absolutely. And that's part of, like I said, that dating before you get married part.
Correct.
One
Exactly.
one of the things we were talking about earlier is just eventually you're gonna hit hard times. It just happens to every successful business. It's just as much part of success as success is. And you said, you got to communicate. If it's good news, deliver it. If it's bad news, deliver it faster. How do you guys think about showing up in those moments? Obviously, you guys have ongoing communication. You guys are intimately involved with your portfolio companies and LPs. What do you have an example or kind of a thought that people are listening could hold on to for how you guys show up or the way an investor should show up when things get difficult? Because I've seen when things get difficult where all of a sudden the investors think they're operators. They assume the problem is poor execution when actually it may be the macros, and maybe something happened in the market, or maybe the thesis, maybe the fundamental thesis is way off. How do you guys think of
Yeah. Yeah. I think that's right. Like you see it in go to market. It's not always, it's usually not the sales leader, frankly.
uh
It's usually that the market you picked is too small, or you're selling the product wrong, or things like that.
Mhm.
It's probably not, but again, you need to have like the diagnostic tools and the data to like support that. I think you just have to make data. Just the management teams that make management teams and investors that make data driven decisions and do
Mhm.
not fall in love and do not fall in love with their opinions and are like willing to have let data change their minds. That's the best and only way to approach an issue where you're having problems.
Mhm.
So
Yep.
if it's a go to market issue, start digging into why are we missing numbers? When we were hitting numbers, what was different? What's different now? Can we bring in advisors who have done this before and just like they have a completely they're completely non-biased. I think just taking like a completely non-biased approach is best.
Yeah. And that part about bringing advisors in is can be powerful. Obviously, if you don't have a network of people you can reach out to, that makes that more difficult. But
Yeah.
but that's critical. One of the things you were talking about earlier is how you guys, how many deals you talk to in a year and how many you guys end up investing in. Before you invest, and you said you kind of had a checklist of 9, maybe they got to meet 5 of the criteria. What is that checklist, and kind of what separates a company you'll back from one that you'll pass on?
Yeah. So we have 8 criteria that we look for in a deal. They've almost been the same since inception. And what are they? And again, only 1% meet all 8. So what are they? And they're very quantitative.
Uh-huh.
Are you 10 million plus in revenue? We want companies that have product market fit.
Hmm.
Do you have 25% plus growth rates year over year? Do you have 70 plus percent gross margin? Are you profitable at the profit line?
Uh-huh.
Are you recurring? Do you have highly recurring revenue?
Mhm.
Do you have 90 plus percent gross dollar retention? Like, do you have happy customers?
Yes.
Do you have any customer over 10% of sales? Are you capital efficient? I.e., are your revenues today greater than your historical cash burn? Not raised, burned. I.e., you're 20 million in revenue. Have you burned less than 20 million to get there? We're looking for like a 1-to-1 ratio. And
Okay.
we will not invest in stuff with less than 5 criteria. It is just our strike zone. Now, we would have missed Amazon. OpenAI is a 4 criteria deal. Anthropic is like a 3 or 4 criteria deal. We are not looking at them. They do not meet our criteria. That is fine. I don't have to feel. It's just like Ted Williams, to use a baseball analogy, understood the strike zone. And he understood if you only swing at things in the strike zone, then your probability of success is exponentially higher. Yes, you might swing at something out of the strike zone and hit the ball out for a grand slam, but if you consistently swing at things out of the strike zone over long periods of time, you won't be paying Major League Baseball for long periods of time. We think of it as an investing the exact same way. So you must meet 5. We can look at any company on planet Earth. And by the way, there's not one that's more important than others.
Uh-huh.
It's just like, do you meet five? Like pick
Yeah.
five. I don't care. If you meet five, we'll then dig in and look at the business. That takes us from 9,000 to 900 companies.
Wow. Okay. That's super, super
It's
helpful.
just, if you think about it, our time, our time and entrepreneurs' time is the most valuable thing. I think one of the biggest problems that investors have is they don't tell people no fast. I also have a problem with that with institutional investors in funds too. It's like
Yeah.
just say no. Like
Yeah.
why do you want to meet me 3 times? It's a waste of your time and my time.
Yeah.
I think it's actually because a huge amount of people in this world just like want to just like keep their jobs and appear to look busy so they can just like show up and collect a paycheck.
I totally agree, Mitchell.
Like they're not actually on a mission for anything. And like,
Uh,
no, I am like, I don't want to tell you that I don't want to invest in your business, but I'm going to tell you that just so like we don't waste my time and waste your time.
yeah.
And I think it's the guys at Sequoia get like a very tough rap on this. I think they're just like, look, we know what we're looking for, and we ignore everything else. And ignoring is just like, hey, it's not for us. Sorry. Like it's just, and for us, it's like very criteria driven. It's, you know, does the company meet six? Does the company meet five or more criteria? Yes or no? If the answer, no, again, how do you go from 900 down to 150 to 175? I mean, simple. Is the market size big enough? Like oftentimes the CEO may not want to do anything, but let's say he wants to do anything. So then how do you go from 150 to 175 down to like 5 to 7 deals a year? Simple. Customer references. Does the data actually say what you said it did? That's a huge thing.
Yeah.
Um, was you know, how do you reference as an entrepreneur? Did the market size check out big enough? Oh, by the way, was the valuation reasonable? Like, can we hit our target returns based on the valuation that you want to do a deal at? Good company and good investment are two fundamentally different things. And so, we have a high cost of capital, and um, we win our fair share, but like we definitely lose them some. And by the way, I mean sometimes, by the way, to be clear, the best deals, like if you just say like, what are your biggest mistakes at Lead Edge?
Uh-huh.
It's not the stuff we invested in that didn't work. It's the stuff we didn't invest in because we thought it was too expensive. By far, but like those are by far our biggest mistakes. That being said, we're still going to continue to operate in the exact way we do because if we've avoided so much garbage by staying super disciplined.
So to use your analogy, I mean, you kind of say the biggest mistakes we made were things that were outside the strike zone. We have proof that they were a grand slam. We didn't swing at them because they weren't in the strike
We
zone.
just didn't swing at them. Oh, by the way, some of them were in the strike zone and we should have swung at them. We just thought the price was too high.
Okay.
And some of them were out of the strike zone. Like Pinterest, we could have done the deal. Our former boss, Brian and our former boss was one of the first investors, the very first institutional investors in Pinterest. One of the other investors, Shanna Fisher, we knew well. We were perfectly positioned to put money in the round that Andreessen Horowitz did at $200 million. But we wouldn't have let it, but we could have put some money in.
Uh-huh.
It was a zero criteria deal. Why did we like it? Because we're like, oh, this company is growing like a rocket ship users, and it's not Silicon Valley Coast users. These are like moms in Columbus, Ohio, or like,
Uh-huh.
daughters in like Cleveland. That's how
Yeah.
you build a big tech company. And we're like, this thing's gonna be gigantic. It just didn't fit what we do.
Okay. Yeah. Yeah. That discipline's critical. And you kind of anticipated my next question of how do you get from 900 down to, where you're investing in 7. And I think you kind of answered that in other ways too, is I'm sure you guys look at the other people that are around the table that are investors and stuff, and how much of a lift is that going to take? And I really appreciate you saying it out loud, because I think it's true, is the most valuable thing is your time and the entrepreneur's time.
Yeah.
And
So, but the other thing is we'll sometimes say, this is like too small of a check for how much work it's going to be.
uh-huh.
So, and so that's fine. That could be a pass for us too.
Yeah.
And so, it's all, you're trying to balance off check size and the amount of work. And like we run a $2 billion fund. Like I can't write a $10 million check and go on the board and be super involved. It just doesn't work. We'd have too many investments.
Yeah. So let's take a moment and walk down memory lane. So across investments from, everything from Alibaba to Duo, security and everything else in between what's a term sheet moment you'll never forget? Not for the terms, but for what it revealed about the founder and the company's future.
Oh, I had like a slightly different thing. Brian Nider and I showed up with you got to ask Doug about this. We showed up with like like the travelers like sweepstakes and the clearinghouse checks, those giant checks, and they come to your front door. We
I've
brought
seen
it to
that check.
No, we brought it to Doug Song at his office. Yeah. We had like literally we brought him like a full size like 10 by 12, 10 by 4 check. We were going to show up at his house on like Sunday at like 8 a.m. We did not do that. But yeah. So that's probably like the most memorable. That's probably the most like memorable moment. Look, memorable exit. I remember where I was when Alibaba first filed to go public. Started trading on the New York Stock Exchange or NASDAQ or New York Stock Exchange. Like that was like one of our first monster exits. Obviously, Bizarre Voice was our first exit. Like we wouldn't be here today if it wasn't for like Brett Hurt believing in us very early on. And by the way, you know how I built my relationship with Brett? Cold calling him at Bessemer Venture Partners, and like literally connected him to like different entrepreneurs there. And I was calling all these e-commerce businesses. He sold the e-commerce businesses, connecting them in. Like Chris Friedland, who ran Build.com and Improvement Direct, which is a monster e-commerce business now that they, sold to Ferguson, but he ran for a while. And, Chris has been an investor with us since literally SPV1, and then, since Fund 1, Brett's been in since Fund 1 too. Met him cold calling at Bessemer. Peter Cobb from eBags, before he sold that business, met him cold calling him at Bessemer. He's been an LP ever since. So it's Bill. We've got a lot of great memories.
Yeah, no, I remember Brett the very first time. I think you were still at Eastern Advisors, and Brett said, "You've got to meet this guy, Mitchell Green. He's like a mental Michael Jordan."
I don't know about that.
Well, that's what he said. So, and I remember where I was the very first time I talked to you. Not that that's important.
By the way, I remember where we were. By the way, when I was sitting next to you and John Mackey as well.
Yeah, that was a funny conversation.
And by the way, the crazy thing is she's now like in college, so we all get old too fast. Like literally, I remember people that I started this in 2010. I made my first Bizarre Voice investment in like 2008. I mean, that wasn't long ago. I mean, it was 17 years ago.
I know.
And so I'm like, I remember kids that are like my youngest kids' ages that are now like applying for jobs at Lead Edge Capital.
Yeah, I know.
I'm like, we are old. Yeah,
exactly. No, trust me. I can't believe how fast it's gone. I don't know what year that was. That was event for Rachel, Brett's daughter, but yeah. Anyways, that conversation I remember, and we don't have to dive into this, or we can edit it if we need to.
Actually, it probably was like, I want to say it was probably like 2015.
Yeah.
Only reason I think that is I think I had because we have kids that were born that year.
Yeah, and you had just invested in Duo and Doug, I think.
Yeah.
By the way, what was the number on that check? I think I remember what it was, but what was the
number? I can't remember. I actually can't remember. I mean, if I could pull it up on my phone and probably look, but yeah, I don't remember.
Yeah, for some reason I could be wrong. I thought it was 100 million, but I could be wrong.
It might be right, but I can't remember.
The conversation that we had with John, I remember he had just sold or was merging or whatever
that's right,
with Amazon, and you asked him, and it was a great question. You said, how long are you going to stick around? And his answer was pretty funny. I don't know that we can probably repeat it here, but it was a good answer.
Yeah. When was this? When did Amazon acquire Whole Foods? Oh, look.
Yeah.
2017. It was probably in 2017 then. Yeah, because that would be, I bet that is about right.
Yeah. So couple more questions here I have for you. So if every founder asks just one question before taking your money, what should it be?
Can I talk to your entrepreneurs of your companies that failed? By far.
Okay.
Most important question.
And why is that? Why is that the most important question? What should they be digging or looking for?
To know how the person reacts when things get tough.
Okay.
everybody's easy when things are easy.
Yeah.
Like when things are going well, that's not the issue.
Okay.
Like I suspect, like, you know, when things get really tough, like in the trenches, you want to know like who you're going to battle with.
Mm-hmm. So beyond the returns and all that come with the investing part of it thing, what do you want your founders that you've worked with and your LPs and GPs to say about how you and the Lead Edge team showed up?
Oh man, it's really team now, right? Like with 80 people. So oh, I just wanted to say these guys do what they said they were going to do. They actually help. Like
Yeah.
their network is absolutely incredible, and they leverage it to the fullest extent. Like they did what they said they were going to do. I think the world is littered with people who say one thing and don't do anything. And I always give advice to young people: be persistent, and if you say you're going to do something, actually do it. Because if you do those two things, you'll be successful in life. And it's funny. I started a company in college, completely failed, and one of the my first investors was this guy Joe Clayton, who was a very senior partner at White and Case, and God bless him, he passed away about 5-10 years ago. And then Ralph Bradford, who was the chair of the economics department. The company completely failed. Completely failed. Lost, we lost people all their money. Now we only had angel money, but
Yeah.
500,000 million bucks. Still at the time, a ton of money for what I thought was a ton of money. And I was like devastated. And both of those guys told me, Mitchell, we guarantee you will be successful in life. Like, and it was because they're like, you're the most persistent person I've ever met, and you do what you say you're gonna do. And like those traits are just like those traits are just like really rare in people, I think. And I also encourage people, like young people, to find the job out of college, probably their first two jobs, where they actually can just learn, like screw the money, and
Yep.
just like, well, you can just like soak knowledge in, and then like at some point you'll have a job where you want to join a place where you want to be able to stay for like 3 or 4 years, and at the end of 3 or 4 years you're going to be like, here's the deal, pay me X or I'm leaving.
Yeah.
So like you want to get the skills, learn them, and then be able to put them to work in an environment where you can actually have some responsibility, prove yourself. But then at the end of the day, say to them, it's like, listen, I proved myself. Pay me or I'm out of here.
Yeah. No, I mean, that's such great advice. And what you're saying is it's overly obvious, embarrassingly simple, but so few people do it. Do what you say you're going to do. Like, yeah, I
Yes.
mean, that is so rare. The other thing is that you do that stands out. And you told me where you started this, and I'd want to hear it again, is the handwritten notes.
Yeah.
I mean, in your LP network, I am not even a gnat's gnat in your LP network, but I get handwritten notes from you.
But by the way, you better get handwritten notes from everybody on my team. Like treat
I do.
people like you yourself. It's just not that hard to write a handwritten thank you note. Like
Yeah.
treat people the way you yourself want to be treated. Like
Yeah.
it's the little things in the world. There's lots of smart people.
Yeah.
Okay. There's lots of smart people, and there's lots of funds that have really good returns.
Yeah.
We just want people to be like, hey, the lead edge guys, those guys are like great people. Like they
Yeah.
remember my birthday. They're like, my kid wanted help with a career advice. They like helped me. Like, oh, by the way, they even send me like a handwritten thank you note. They send me a bottle of wine and we help. It's just like,
Yeah.
it's the little stuff.
Yeah.
It's doing a lot of little things combined into like one really big thing.
Yeah.
And I tell all young people, it's actually a funny story. So we were at the country club in East Hampton that my in-laws are members of, and there was a very famous like titan of private equity industry, that was speaking, and they do like the Sunday, dinner
Yeah.
series or whatever. And the guy was like at the very end of his speech, like 10 lessons in life. And the second lesson was write handwritten thank you notes. To which my mother-in-law turns to me and she's like, Mitchell, you're a genius. To which my wife is like, he's not a genius. It was my idea. And so, yeah, so the
Yeah.
handwritten thank you notes are actually my wife's or my mother's, idea. So,
Uh,
and I try to still instill it in our kids. Sometimes it's so difficult.
yeah.
You get a present, you write a thank you note.
Mhm.
And half of the kids understand it on some days of the week, and half of them don't. I
Yeah.
also think another thing, um, just in general, is like young people constantly, there's this desire for young people to constantly want feedback. I'll give you feedback. If I'm not telling you anything, you're probably doing a good job.
Yeah.
Like, um, go back to your desk and just like work really hard. Like
Yeah.
again, I think in a lot of industries, like over the last 10, 15 years, the like, just show up, show up at the office, work hard, ask people how you can help, be intellectually curious, like, have a great attitude. Like it's just that's the same thing we're looking for in entrepreneurs too.
Yeah. 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 No, once again, I really appreciate you sharing that. I mean, that's something that I've been hammering home, doing, before, I was an operator and then been coaching CEOs like we've been talking about here for 30 years. These are the things that I'm pounding home, or some of these simple lessons that, we just make too complex. So I want to make sure and wrap up here. I want to be respectful that we're,
Sure.
get back to your family, but I want to go through a lightning round of questions if that's all right
Sure,
with you.
no worries.
All right,
Absolutely.
real quick. Best habit you've seen that more CEOs should adopt?
Oh, Brett Hurts. I can't get any other CEO to do it. Like the updates he writes. I mean, he doesn't write them. He combines them together, and you can
Yeah,
use AI now to instantly. I think that's an amazing habit. It's just like the communication is just like unbelievable.
yeah, yeah, yeah. No, I couldn't agree more. I'm invested in probably over 40 different deals, and it's the only one where I get any
He was the only
communication.
one. He was the only one. It's incredible. Like and I think he does it actually for more just like train of thought for what's going on to keep him really focused. And then
Yeah.
he just like it's like, oh look, I'll share it with my investors. It's amazing. There's no
And
such thing
I
as
also think,
there's no such thing as oversharing, I believe.
yeah, and I also think he respects that he's using other people's money and they have a right to know what's going on.
100%.
Yeah. All right. Biggest red flag you can spot early in a pitch that others might miss.
Unrealistic. I mean, unrealistic, completely unrealistic. Uh, forecasts and revenues and earnings and stuff like that. By the way,
Okay.
we do have a letter called the hierarchy of bullshit where we
Uh-huh.
we actually walked through in our quarterly letter how CEOs lie to us.
Is there any way that listeners could get
Yeah,
access
you
to
can get it if you remind me
that? Okay.
and send me an email. I can have the IR team send it to you, and then
Okay.
you then you
Yep.
can then you can say where it is. Yep.
Okay. All right. I'll get it. Most underrated question a CEO can ask an investor.
Can you help me? Like, can
Yeah.
you? Most CEOs don't like to ask for help
Yeah.
because most people are afraid to like admit what they don't know.
Yeah. That's when a lot of times people say, as I'm coaching, they say, well, how do you end up working with people, or how do you find the right people? I'm like, they find me because people that don't want help don't look for me.
Exactly. Look, I believe actually that being a CEO is a really lonely place, and actually that's why YPO is so successful because you actually just like these are forums where people that are like, a lot of people are afraid to ask for help, and they can like talk to their peers, ask for help.
Yeah. 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 Exactly. Biggest misconception founders have about raising capital.
That valuation is the most important thing.
One thing you do differently if you started Lead Edge again today.
That's a good question. What would I do differently? I mean, the best thing I ever did was hire Nime, and the second best thing I ever did was bring on Brian.
Uh-huh.
What would I do differently? I would have gotten into growth buyouts earlier.
Okay.
I would have taken majority. So, we didn't really start leading our own buy. We led one buyout in fund three,
Mhm.
safe send in fund five. And, now we do a lot of them. I would have done more of that earlier.
Okay. One personal discipline outside of investing that makes you a better investor, a better husband, and a better father.
Try to like work out a lot.
Mhm.
Just clear the air and work out. I wish I could get up. Like I'm very good at getting up early in the morning if I have a reason to get up. My biggest downfall is the fact that if I don't have a reason to get up, I will sleep in.
Okay. All right.
And
That's
like
good.
I just find I'm so much more productive getting to the office like really early in the morning. You get so much done.
Yeah. 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 No, I agree. Last one here. What's something about you most people in the investment world or in your circle wouldn't guess?
I am extremely um I doubt myself way more than people like ever think I do. Like I actually don't have a huge amount of self-confidence. Like people would be like, we don't believe that. But like, yeah, I run terrified that I'm going to fail. Like I am terrified of failing. And so, yeah, I've never been like the cool kid. And so like, I am absolutely mortified of it. Additionally, something else that these people don't think is I actually am very like shy. And so if there's a room where there's 100 people in it, and like I don't know anybody, I will literally go sit in the corner of the room and not talk to anybody. And people are like, I don't believe that. That's impossible. You have like one of the world's best networks, but it's all been like one-on-one networking. Like, I'm very good if I get introduced to somebody and I sit down and talk to them, I can figure out like, hey, who do you know that you don't know that you should know that I know, who probably also wants to meet you. But in terms of like, I am extremely shy going up, like, I would do much better in dating than I had did for 20, 15 years before I somehow convinced my wife to, want to date with me. Like, I would never go up to a person at a bar and talk to them. Like,
Uh,
Tinder and Bumble would work way better for me. I'm not dating obviously, but in that scene, like I'm very shy.
Yeah, well, thank you for sharing. I appreciate it.
Yeah.
I appreciate your transparency there. I would say it's true of a lot of really successful entrepreneurs as well, as they kind of this fear of failure.
Yeah.
A lot that I've met or that I work with anyways.
Yep.
Some not, and those are the ones that get themselves in trouble. Last, people that are listening, I'm sure got a lot out of this conversation. What is the best way for them to find out about you, Lead Edge, connect if they wanted to?
All right. Take a look at our website. If and you can, any if we like creative people, they can figure out our email addresses. And well, please reach out to us if you have a 5 criteria or more business. But no, look, we like persistent people, and so yeah, again, it's just you can find us. It's not that hard.
Yeah. Okay, good. And truly, the final question
Of
is,
course.
so when we wrap up here and you're talking to Lisa about it, whatever, what's one question you'd be like, I can't believe you didn't ask me this. That was a miss.
That's a good question. Well, I thought about it a minute ago and then I forgot. How was it? What would I missed? Maybe like, why did I back Bizarre Voice originally? And it was just Brett had a amazing business and I like loved Brett's energy and Brett does what he says he's gonna do, and it like met the criteria that we were working on. Like I wouldn't be here if not for Brett Hurt. Like I tell a lot of people that because I was nobody. I didn't have a fund and he could let us like he let us invest in his business, help him like crazy. And then, it's been a reference probably 100, 200 times for us over the years. And so I think we are indebted. We're indebted to him and Jack Ma at Alibaba. Now, again, we weren't like, I can't claim to be friends with Jack Ma at all, but like we made a huge bet on Alibaba when it was a private company that, it was effectively a public company, but it was private and it worked like massively well. So.
Yeah, well, I appreciate you saying that about Brett. I wouldn't be where I'm at today without Brett and what he's done for me, making these kind of introductions. I would never be an LP in Lead Edge and everyone that we're going to be talking from Doug Song to Brett to Julie Maples, Greg Kaplan. They're all because of Brett. So
yeah.
Thank you, Mitchell. I really
absolutely
appreciate your time.
No, for sure. Absolutely.
All right.
Thank you for tuning in to the For You Leaders podcast with Kirk Dando. If this episode helped you think more clearly or act more decisively, that's good. But the journey doesn't stop there. Subscribe for more content on Apple, Spotify, or YouTube, or go to Kirk's website at kirkdando.com to inquire about coaching opportunities. Now think of a friend, family member, or business leader in your life. How could you help normalize their journey today? Share this podcast with them. We hope that this sparks meaningful conversations in your life and that it enables you to become the leader that you aspire to be.